Full year results from Tharisa PLC today. The company operates a chrome and platinum group metals mine in South Africa. Here to tell us all about it, all about the latest, it's Phoevos Pouroulis. How are you, Phoevos? Good morning.
I'm doing well, thanks, Alistair, and yourself?
Yeah, fine, thank you, fine. So looking at the results today from Tharisa, a very big revenue number for a start, over 600 million US dollars, operating profits up, EBITDA up. You've been mining chrome and platinum as usual and the other PGMs. How do you feel it's been going?
Yeah, listen, it was a tough start to the year with the first 6 months being challenged by inclement weather. And it's pleasing to note that the second half improved materially in terms of our reef tons mined, as well as the market conditions. We saw PGM prices increase some 18% to over $1,600 an ounce. It was offset a little bit by lower chrome output and about 10% lower chrome prices. But all in all, a good year, a robust performance. And notwithstanding the fact that we invested some $118.5 million in our growth projects.
And you've also got a very robust net cash position too, haven't you?
Correct, yeah. We're sitting with cash and cash equivalents at the end of the period of $175 million and in a net cash positive position. So really a balance sheet that's geared for or set up for growth and ready for some gearing. For us to sort of make effect to our underground transition at the Tharisa mine, which we've started with, and as well as continue to invest in Karo Platinum. In this last financial year, we invested just over $33.5 million, and we continue to develop that project, which we're very excited, hopefully, to bring into production within the next 15 months or so.
And what sort of production levels are we talking about there?
So the nameplate capacity is a throughput of 2.64 million tons per annum, yielding around 220,000 ounces of platinum group metals. So more than doubling our current output of platinum group metals. So a significant growth story for us.
And you've got growth, you mentioned a moment ago, in going underground at the Tharisa project itself. Currently 3 open pits, I believe, but underground is the big next step.
Yeah, so we've operated primarily the East Pit, West and Far West Pit. The East Pit constitutes around 70% of our production, West and Far West the balance. We've decided to start the transition in the West Pit while we continue mining the open pit in the East. And as we transition over the next 3 years to achieve steady state of 255,000 tons from the West Pit, we will then commence with the portal development on the East Pit through the Orion complex. And by 2033, will be a fully underground mine, delivering more than our nameplate processing capacity, which currently sits at 5.6 million tons. We'll have the potential to mine over 6 million tons with both portal developments, Apollo in the west, Orion in the east, by that point in time. Yeah.
So if you add both projects together, then what sort of production levels are we talking about in the long term? 2033, you mentioned a date there.
So in excess of 2 million tons of chrome concentrate per annum, and in excess of 400,000 ounces of platinum group metal. So significant producer of both PGMs and chrome.
And let's talk about the costs of all this then. So you've got underway. Is it going to be a heavy lift for you guys? How's it going to be paid for?
Yeah, so I think that's the key question we've been asked is, how do you fund all this growth? And I think we're pleased to have secured a banking facility or term loan facility and a revolving credit facility of $130 million from Standard Bank and ABSA, ring-fenced for the underground mine at Tharisa. When you look at the peak funding over the 10-year period, it comes to $173 million. So more than enough facilities there with the revolving credit facility to cover that investment at the Tharisa underground. This is also supplemented by $45 million worth of asset-backed finance. Even though we're going with a contractor mining model, we will be acquiring the equipment ourselves because we see ourselves, in year 5 and beyond, taking over the contractor role and taking on owner mining. So bringing that skill set in the maintenance and understanding the equipment is a call that we made right up front, particularly around the selection of the equipment. So more than enough capacity there to fund the Tharisa underground. As I say, we're on reef development, so we generate income while we're developing the mine, and it is a transition as opposed to a new sort of capital project like Karo, which has a sort of development timeline, and then your first income or first cash generation commences. So then if we moved over to Karo, we've invested to date some $193 million. And what that has done, if I can just touch on where we are in the project, it's basically given us the ability to, with a high level of confidence, understand the geology. We've done 60 kilometers of diamond core drilling, which has given us a confidence around our first phase, which is 10-year open pit mine, giving us a resource of some just over 12 million ounces and a reserve of 2.3 million ounces, bearing in mind that this is a massive resource of over 24,000 hectares with an estimated total resource of 96 million ounces. But what we've been doing in parallel is drilling campaign for the underground potential. We've got a concept study which is complete, and now we're busy with a feasibility study with that infill drilling. So a high level of confidence around the geology and the structures on the Great Dyke. We've also concluded our metallurgical test work on the platinum group metal reef horizon and the base metal reef horizon. We've got also a high degree of confidence in terms of the recoveries there. When we look at what we've installed and implemented, we've completed all our design and engineering. Earthworks are complete on site. Civil works are around 68%, and 90% of the long lead equipment items have been procured and in storage, and we've delivered to site some of the key equipment. The mills have been delivered and installed on site. We secured bulk water and power, and we're busy with those infrastructure programs. So all looking good and going according to plan. We've also appointed the mining contractor, which is a 5-year open pit contract, renewable for a further 5 years, to EPSA, a Spanish well-known tier 1 open pit mining contractor, well-known in South America, Australia, Europe, and they do have a footprint in Africa. This will be their first contract in Zimbabwe, and they have started mobilizing for the phase 1 early waste stripping. So very excited to have them on board. So that's the capital we've spent to date, the $193 odd million, which is equity from Tharisa PLC, as well as the VFEX, the Victoria Falls Stock Exchange bond that supported or fulfilled that $193 million. And there's some remainder of that capex still to be spent. Thereafter, we have circa $300 million to invest to conclude the full project. We have been in discussions with senior debt providers, with Export Credit Finance out of South Africa for $178 million, coupled with a mezzanine debt facility of $25 million, that coming in just over $200 million. The balance to get us to the 300 or just over $300 million is via a dual prong approach. One is a gold stream. You can imagine where gold is trading at the moment. Gold streams, while not always the lowest cost of funding for a long duration project like this, are looking very attractive at current gold prices. So it's something we're pursuing, and we do have terms for a stream on the table. But coupled with that, we do have interest from a strategic investor that is very keen on the group, and in particular Zimbabwe. So that's progressing very well and on track. In terms of timing, for that last leg, we're looking at concluding the senior debt facilities as well as the investment by the end of first quarter of the new calendar year, which then ties in with my original timeline that I mentioned, around 15 months to completion from that first funding. So sort of Q1 2027, first ore in mill, allowing us to ramp up over a 6-month period. So by the end of 2027, we should be hitting our stride at the Karo project.
Very interesting indeed. So plenty to look forward to there for investors and for your partners and and other associates. Let's touch on a couple of other aspects of the company before I let you go, Phoevos. First of all, I believe you're beneficiating as well to some extent in one of your production streams. Tell us a little bit about that.
Yeah, absolutely. So we have a wholly owned subsidiary called Arco Metals, and this has been our R&D and commercialization unit. And so when we look at our metals that we mine, we've always said, where can we extract value? And using the ethos of innovation, we've developed 5 beneficiation streams. Taking the platinum group metals first, we currently sell concentrate to the major PGM refiners and producers in South Africa. We have been running a 1 megawatt DC furnace over the last 5 years to prove a novel process to produce an alloy as opposed to a matte product. And we've also been trialing a patented technology called chloroplat to refine those platinum group metals to 495 purity. We will be installing our first commercial reactor this year at a key national key point site in South Africa, the only chlorine producer, where we'll be piping the chlorine in to prove at scale the modular nature of this refining process. So very exciting from that perspective, because it'll be the first fully integrated, independent, let's say, PGM facility, and has a lot of potential for us to grow and ultimately refine all of our Tharisa Minerals PGM output that currently is sold. Beyond that, we have the potential to deploy the technology into Zimbabwe and refine and process our platinum group metals and base metals in Zimbabwe. So that's the one area when we look at the platinum group metals side of the technology. Then we look at our chrome value chain, and there we have 2 processes ultimately looking at long duration energy storage, again under a wholly owned subsidiary called Redox One, where we have been developing IP for long duration energy storage using redox flow technology, which is well known and quite an old technology. But what's key here is we're taking the concentrate, the chrome concentrate from Tharisa in South Africa, and producing the chrome and iron chemicals, which is really the storage for the redox flow battery. And that electrolyte manufacturing is happening in South Africa adjacent to the plant, where the stack development and the battery technology is being developed by our team in Germany at Redox One. And so we've had huge momentum and a lot of interest behind this long duration storage technology, primarily because there's a global requirement for storage as a solution. We have obviously the lithium ion technologies, which are very suitable for mobility and for quick discharge and charge, but not ideally suited for grid scale, sort of 100 megawatt, gigawatt scale deployments. And this is where sort of the redox flow technologies play a vital role. So in the new year, we'll be deploying our first commercial unit at the Tharisa mine to store our renewable energy that we have on site, as well as deploying to 5 other key global destinations that have shown interest. So a highly scalable, very exciting technology, unlocked by the fact that we own the natural resource and have the lowest cost source of the electrolyte, which is the key cost driver to all of these technologies. Further, in terms of the value chain, we're also developing 2 parallel processes for our chrome products. One is to produce grinding media. Most people don't realize that the metal balls that we use to break the rock in our mills is a chrome alloy of sorts, and typically it's imported or supplied by local suppliers. And we've developed a process and a unique technique to produce the composition from our ores of that alloy to be a direct feed source for the chrome ball manufacturers. And so it's a grinding medium solution, which we're quite excited about because it is a niche market and we have a unique ability to supply into that market and ultimately potentially evolve as a supplier of grinding medium. The second and maybe far larger initiative is entering the stainless steel market. So we've been developing a technology and process where we bypass the intermediary stages of producing alloys, whether it's ferrochrome or ferromanganese, ferronickel, and bypass that stage and go straight into raw stainless steel production. And we've proven this through our beneficiation site, and we're busy now looking at commercializing and scaling this process up. It will require collaboration from incumbents in the industry, but certainly very exciting and carving out a niche outside of the mainstream production of ferrochrome and stainless steel.
So finally, let's just mention before we go, there is a dividend. Tell us what the dividend is, Phoevos, and what it means.
Yeah, so we've been pretty disciplined in terms of our capital allocation. The final year dividend is 1.5 US cents, making a full year dividend of 3 US cents. If we take into account the share buyback of $5 million that's nearing completion, it gives a return of 17.2% net profit after tax. Now, we debated this at length at the board because you would have noticed that we had a reversal of a tax provision, which supported a credit to our cost of sales of some $67.3 million. This is a PGM royalty case that we've been fighting for the past 7 years, and pleased to have resolved this matter with the tax authorities, where we came to an agreement with them. So that gave us a boost to our earnings, but really it was, if you take it over the period of time, the number of years, it's not a cash flow or inflow event. And so we took a balanced view of looking at our capex for the next financial year and the years ahead, as well as the increase of this inflow. So we took the interim dividend and we copied that and basically suggested that 3 US cents would be appropriate, which will be voted at the AGM in February next year by shareholders.
So we look forward to the February AGM. In the meantime, Phoevos, thanks very much for joining us today. Congratulations on the results and good luck with your plans for development and growth.
Great. Thank you so much, Alistair. Have a good day further.